What if one small slip-up can cost you an entire month's profit? You might think you're handling payroll correctly until that letter arrives. The IRS audit notice that could change everything. A restaurant can quickly go from profitable to bankrupt because of one payroll mistake. The worst part is, these errors seem harmless at first. A small classification error here, a tip pooling issue there, but they can quickly turn into big financial or legal headaches. There's a way to ensure compliance and eliminate guesswork. We'll get to that later. First, let's explore 7 common payroll mistakes and how much they could cost you. The first mistake starts with what seems like a clever way to save money. Carlo's Pizza believes they found a smart solution, classifying all delivery drivers as independent contractors. No payroll taxes, no workers' comp, no benefits. Carlo saves thousands each month. Then the Department of Labor arrives for a routine inspection. They find that the drivers use company bags, wear company uniforms, and follow specific routes. Carlo sets their schedules and controls their work. Here's what makes someone an employee versus an independent contractor. Employees follow company schedules, use company equipment, and the business handles their payroll taxes. Contractors set their own hours, use their own tools, and pay their own taxes. The Department of Labor rules that Carlo's delivery drivers are actually employees. Carlo now owes years of back wages, uncalculated overtime pay, and payroll taxes. And penalties can quickly add up. A 2-location restaurant in Minnesota was fined over $430,000 for misclassifying cooks and dishwashers as independent contractors in 2021. The IRS stresses that the actual relationship with the company, and not just the label, defines employment status. Proper classification from day one prevents these huge penalties. But even correctly classifying employees creates problems if you handle their tips wrong. A high-end restaurant in Boston used a tip pool for their service staff. When people got promoted to floor captain, they kept them in the tip pool. A worker complained to the state labor department, arguing that employees with managerial duties shouldn't get tips. The investigation uncovered 2 years of violations. Tip pooling laws are tricky. Tips are legally the sole property of employees, and managers cannot share in them. Different states have different rules on who qualifies as management and who can share tips. The press release from Massachusetts Attorney General said, even if managers and supervisors help to serve customers, they cannot share in a tip pool on a day when they have any managerial responsibilities. The financial damage was severe. The restaurant owed back wages and penalties amounting to $1.8 million. Understanding tip pooling laws could have prevented this hefty fine. Wage violations become even more complex when operating across multiple states with different overtime rules. Coastal Bistro has 15 locations in 3 states. They follow federal minimum wage laws and pay overtime after 40 hours weekly. And they believe they're fully compliant. A line cook in their Oregon location discovers that the state requires overtime after 10 hours in a single day, not just 40 hours per week. She files a complaint after years of unpaid daily overtime. This highlights the complexity. What's legal in one state may not fly in another. The Oregon complaint sparks a class action lawsuit. Hundreds of employees join, seeking back pay for unpaid overtime, missed breaks, and other wage violations. Failing to pay overtime can reach 7-figure fines. A steakhouse with locations across West Virginia and Pennsylvania had to pay $1.4 million for denying overtime pay. Payroll software that automates calculations and tracks hours prevents these errors. The system applies correct overtime rates based on federal, state, and local rules, so you don't have to worry about compliance. Even if you get overtime right, tax withholding creates its own problems. Maria runs a family restaurant and handles payroll herself. She manually calculates federal income tax, Social Security, and Medicare weekly. It seems fine until the IRS audit letter arrives. Small withholding errors quickly become big tax debts. Maria miscalculated federal withholding for several employees and forgot to update their deductions when they submitted new W-4 form. These mistakes led to underpayment penalties and interest. Payroll taxes and deductions include federal, state, and local taxes, Federal Insurance Contributions Act taxes, or FICA, and deductions for benefits like health insurance, 401k, vision, dental, etc. Employees pay for most of their own payroll taxes, but restaurants have to pay for some on behalf of employees. You pay for FUTA taxes and a portion of FICA taxes. taxes. IRS penalties can escalate quickly. Underpayment penalties start at 6% annually with compounding daily interest. The IRS can go after personal assets for unpaid payroll taxes, making owners personally liable for employment tax violations. Many restaurants already spend more than they plan to on labor, with 44% of restaurants saying they regularly exceed labor budgets. Making tax withholding mistakes can cause more unexpected financial burdens. Automated tax calculations remove human error by applying current rates and updating W-4 changes automatically. But even if you withhold exactly the right amounts, you can still miss other forms of taxable compensation. Blue Harbor Grill tracks all wages and tips perfectly. They withhold taxes and report tipped income. The owner thinks payroll compliance is covered until a manager reports missing vacation pay. The complaint triggers a full payroll audit. They found that they paid bonuses during busy season but forgot to add them to tax forms. They also missed adding fringe benefits like gift cards and meal allowances. Each missed compensation category means unpaid taxes, Social Security, and Medicare contributions. Make sure you include all taxable compensation in an employee's gross pay, from service charges to free gifts to sick pay. Of course, doing all of this means nothing if you can't prove your compliance during disputes. Garden Gate Cafe faces a wrongful termination lawsuit from a former server claiming they didn't pay her for overtime and some breaks. The owner knows that she's wrong, but she can't prove it. Missing timesheets, payroll records that only show final amounts and not calculations, time clock data deleted during an upgrade, non-existent documentation for break times, schedule changes, and overtime approvals. You need comprehensive records to stay compliant. Accurate time tracking that shows exact punch in and out times. Wage calculations to prove how you determine pay. Tax withholdings to show proper deductions. Tip reporting to track all gratuities. Federal law requires you to keep these payroll records for at least 3 years, and even longer for some states. Without proper documentation, courts may assume that the claimant's version is correct, and fines can climb into the tens of thousands of dollars. The DOL recently fined a Minneapolis pizza restaurant over $100,000, with listed violations including inaccurate records of employee contact info, employment duration, and proof of tip payment. Digital record keeping provides bulletproof documentation that protects your business during lawsuits and audits. But having perfect records can't protect you from missing filing deadlines. Riverside Steakhouse calculates all their payroll taxes correctly, withholding the right amounts for tax, Social Security, and Medicare. The owner files quarterly reports 1 day late due to a family emergency. Between federal deposit schedules, quarterly 941 filings, and varied state deadlines, manual tracking is hard to keep up with. Some states require weekly deposits, while others follow the federal schedule. Failure to file penalties start at 5% per month on unpaid taxes. Interest compounds daily. Late deposit penalties can reach 10% of the taxes owed. Late deposits and filings can trigger penalties and interest that outweigh your actual tax debt. Restaurant Dive reported that half of restaurants find payroll software important for their business. Automated systems prevent late submissions by filing returns and making deposits automatically. Smart restaurant owners educate themselves on their payroll options and act before disaster strikes. Automated payroll software like 7Shifts ensures compliance and eliminates human error. 7Shifts Payroll calculates taxes and overtime correctly and files forms on time. Unlike the big payroll guys, 7Shifts is built for restaurants. It integrates time clocking, scheduling, tip management, and payroll, letting you manage your team in one easy-to-use platform. Visit 7shifts.com for transparent pricing that includes free setup and free year-end filing. Every day without proper payroll processes increases your risk of audits, lawsuits, and financial pain. Kudos to you if you manage to avoid all 7 of these mistakes. If you're in the restaurant industry, which I assume you are because you're still watching, subscribe for more industry tips.